Friday, February 19th, 2021, Monaco 64, home of alternative economics and contrarian views. So I really think the Federal Reserve and all the other major central banks are in a panic about commodities. They're losing control of commodity prices, of inflation expectations. We're seeing yields in the US shoot up, but also in other major countries, yields are starting to move up. And that's why gold and silver are being kept down, because gold and silver are the ultimate barometers of inflation. And they're trying desperately, in my opinion, to keep it down. I don't think they will succeed. We will look at the commodities that are going through the roof here. And yeah, I think it's only a matter of time that we turn around in gold and silver. Before I start, though, I like to say I saw a comment in my video from yesterday, and it said, what's the best gold ETF to buy? And I actually replied, there's no such thing as a good ETF unless you want to deal with the bankers, because that's what buying an ETF is. And I've been saying this for years. I even have a mug. It says only physical gold and silver will slay the bullion banks. So there you go. You have to keep it outside the financial system, be it at your own home or at a private vault outside the financial system, whatever makes you feel comfortable. It depends how much, of course, gold and silver you have. So just wanted to say that. But yes, I was just looking here as I turned my systems on at the commodities section from my system, IG.com. That's what I use for the prices. And I was going to talk about something else today. I was going to talk about the fraudulent nature, the Ponzi scheme nature of our monetary system. But this is kind of related to it, because the central banks, especially the Federal Reserve and the Bank of England, those are the two, really the two capi, like the, capo di capi, the godfathers of this whole fiat currency system. They've been able to keep commodity prices suppressed for 50 years. Of course, sometimes they kind of lose control, and I think this is one of those times. And why have they tried to keep commodities suppressed? Why would banks want to do that? Well, because rising commodity prices is a bad reflection on the fiat currency system. It means that their paper trash is not worth anything. So the more they can keep it suppressed, the better their fiat currencies look. And I think they're at the end of the road, and that's why they're desperate to keep gold and silver from rising, because gold and silver would confirm that. Right now, they're trying to say, oh, commodities are going up because the economies are recovering, because there's reflation. I mean, do you really think the economies are recovering? We've been in a lockdown here in this country for almost a year, except for a few months that they've let us out of our houses. In the US, we saw the data from yesterday, jobless data really getting bad. We're seeing import prices go up. So that's what I think they're doing. They're really desperate right now. So yes, let's have a look at the commodities here. And we're going to look at the base metals. So high-grade copper is almost approaching $4. Yesterday it was at $3.92 when I spoke. Now it's at $396.50. Look at this chart. It's a weekly chart. I mean, we're almost at the all-time highs, which is around 464. Still a little ways to go, but look at it. It's just really picking up here. It looks really bullish. So is it just copper? No. Look at nickel. Same thing. Nickel, I don't know. Well, recent highs. The chart unfortunately doesn't go back further than 2017. Zinc is lagging a little bit, still picking up. Aluminum or aluminium, as the English would say, same thing. Iron ore, yes, it's off the highs, but picking up. The other thing, someone noted to me yesterday, someone sent me an email. Well, look at lumber. I mean, this is amazing. I think it's almost at $1,000. So there you go, lumber. Look at corn, soybeans, live cattle picking up. And we've seen also metals, precious metals like platinum, where the bullion banks don't have as much control, even though they do control it too. Platinum is making recent highs here. So I really think the powers that be are pretty concerned about what's going on. And yesterday we saw as well the COMEX futures, because the COMEX futures, for example, they trade, the regular hours is 8:20 a.m. New York until 1:30 p.m. Those are the regular trading hours. That's when the future or the market is the most liquid, there's most volume. And then they reopen most of the rest of the day, except for an hour between 5 and 6 p.m. New York. The market trades the whole time, but those are after hours or pre-hour trading. It's a lot less liquid. And what happened last night, which is afternoon or early evening in New York, when it reopened, after it closed at 5 p.m. and reopened at 6 p.m. New York, they smashed silver all the way from like 27 to almost 26 in a matter of seconds or minutes. And how do they do that? Because I was a futures and options broker. I'm old enough to have seen these contracts trade just on the floor of the exchange, real people putting orders into the pit from the booth, from the office. I used to work in the office. I used to call my colleagues in the booth and say, buy 10 gold futures contract. They get the order. They'd pass the order to someone, to the trader in the pit with their hand signals, and he would buy either at market or he would work a bid. And that's how it used to work, but now it's all screen-based. It's all screen-based. I don't think there is any exchange in the world right now where people are on the floor. So, right, what happens, let's say, the electronic systems as well. Now, you can't tell who's bidding or offering or who's trading. Back in the day of the exchanges, all the traders used to wear jackets to identify themselves. So you could see if Goldman Sachs or JP Morgan was doing something. Nowadays, it's all it's not transparent at all. And what happens, what do I think happened last night with the silver? Well, the traders, the brokers, they know where the stops are, because they have to, a stop, you have to place it in the system. So let's say JP Morgan knows there's a stop at silver at 26.90, that one of their clients is working to sell 200 lots, which is quite big during after hours. So what does that mean? If 26.90 trades, that stop will be triggered automatically in an electronic system. And what that will do, it will probably trigger stops below that as well. And the price will just like get hammered down because there's very little liquidity at that time. And the thing with that stop, JP Morgan might have triggered it themselves with just one lot. They sell one lot at 90 and it triggers it. But in the old days when it was an exchange, if they try to do that, just to sell one lot at 90 to trigger stops, and even on the floor, people kind of had an inkling to where the stops were because of the technical picture. If it was one lot and you were working a 26.90 stop, your guy in the booth or girl in the booth would tell you, look, I haven't triggered that stop yet because it was just one lot. and it's holding here. So it was a different kind of market. So I think that's what happened. And why did they want to trigger that stop last night? Well, because they're desperate to cover. We've seen the SLV has had to change the rules. They don't have enough silver. So what they're doing, what they probably did last night, because as fast as it went down to 26.05, it came straight back up. And why? Well, because they were buying to cover their shorts, and it was a really good deal for them because they only used one lot to trigger that. But what that did is that screwed all the other people that were long and had a stop, right? Because that stop probably shouldn't really have been triggered. And that's why I say don't be involved in the paper market, because they're gonna really rip you off, because they control these markets and they know all the little tricks. And yes, avoid swimming with the sharks. Just buy physical and stay out of the shark infested water of paper gold, of ETFs. So what about this morning? Where are we? It's 8:34 a.m. London time, or GMT. Gold actually got down to 1760, and I think the action in silver helped gold come off as well. 1760 is a key level. I think now it's like a triple or double bottom. I'm not too sure. So right now we're at 1773.70, down just under $2. So it has rebounded. The high's been 1779.80. Silver, the chart still looks very good. The weekly and monthly chart in silver, despite the fact that we traded down to 26.05 overnight. Right now we're at 26.90, down about 11. The high's been 27.11, and the low, of course, as I said, 26.05. Stock market, the Dow futures is down 40. I think yesterday they rallied back at the end of the day. I didn't even bother to see how they finished, but it's just a joke, these markets, really. We've got the S&P down 1 point, NASDAQ up 6 points, NASDAQ 100 future. Currencies, yes, they're also strong, just like the commodities are strong. And it's frustrating for those of us who think in gold and other currencies, but I think you just have to batten down the hatches, sit tight. That's what I've been doing since 2002. And I said, I think a few weeks ago, that I've become more and more immune to these price manipulation periods. Yes, but it's still frustrating, I have to admit. I will be honest with you. But whenever it happens, I try to think of the alternative. The alternative is to try, well, the alternative is not to try, but the alternative is to exchange my hard-earned physical silver and gold for paper and put it in the bank. And by doing that, actually, it's not even mine. It's an unsecured loan now, financing the very same people and governments that are doing this, acting upon this market like this, who are manipulating everything, who have put us under house arrest for over a year almost now. So that's the alternative. And for me, that would be succumbing to evil, really, because this system is just like completely screwed up and very dishonest. So yeah, the pound right now is up slightly at 139.80. So why is the British pound risen so much? I mean, we were down at 115 last March versus the dollar, the pound, and now recently the Bank of England said, oh, we're gonna institute probably negative rates. We have a deficit here of like 25% of GDP. Our economy is basically locked, shut down for months. The unemployment numbers have been kind of manipulated, or the real number has been hidden by this furlough scheme. The millions of people that are in the furlough scheme, they're not being counted as unemployed. How can the pound go up so much? I know the dollar and the US, the Fed and the Treasury are spending a lot, and they're going to spend and print more. Well, I think what's happening there is that the Federal Reserve has kept the swap line open for central banks like the Bank of England. What does that mean? Well, it means that the Bank of England can borrow the dollars, and then with that, they'll buy pounds and sell those dollars, and they'll do that through a swap. What that means, a swap, is that it will have a settlement date in the future. It's a forward, so they will have to pay back those dollars one day to the Fed. And why are they doing this to the pound? Well, because I think they're also trying to control inflation expectations, because if the pound was lower and commodities were up as far as they are right now, it would make things even worse here in terms of inflationary pressures. They're also trying to keep people in their system because they need the cash. The Treasury needs the cash. They need to keep the pound looking decent versus real things, and that's what I think is happening. The Bank of England has an account called the Exchange Equalization Fund that was created in 1931, 3 years before the Exchange Stabilization Fund that the Treasury created. And it's an account that's there to manipulate the value of the currency. And 1931 was the year that England went off the gold standard. So it's not surprising. As I said earlier in the video, it's all about controlling the price of real things versus their currency. So yeah, the euro strong as well this morning, a bit stronger than the pound. It's up 1/3%, or a quarter really, at 121.24. The dollar's down 1/4% versus the yen at 105.38. Dollars down 0.2% versus the yuan at 644.60. And yes, I've gone through the commodities. Copper right now is 397. It's up even more since we started this video. Crude oil has come off. I guess that's helped a little bit contain things, but it's still near 60. It's at 59.35. It's down over a dollar. What about the 10-year yields? We'll finish with that as usual. Yesterday, I think we got up to 132. They're really, I think, trying to keep it from going above that level. Right now, the 10-year yield is at, let's see, at 130. It's up 1 basis point. The high overnight has been 131. The 30-year yield is at 208, unchanged. The 2-year yield is actually really stuck there at 0.11. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.